Hey guys, and welcome back to a brand new episode of KOSHKAH'S Academy of Trading. So today we're gonna go over a really important concept, that is the fractality of the market structure. And this is the concept that my whole strategy is based on it. So guys, the fractality of the market structure is the concept that if you can understand, you can completely change how you see the market and how you're trading. So we need to understand one simple thing about it, that is that on trading we have multiple time frames, right? You have the 4 hour, 1 hour, 15 minute, 5 minute, 1 minute, etc., and even the daily and weekly. And in every single individual candle, depending on the time frame that you are, so let's say we are on the 4 hour, in this one big 4 hour candle, we can go on to the 1 hour and we will find 4 candles inside that big 4 hour candle on the 1 hour. So that means if this is your big candle on the 4 hour, inside of this big candle and that timestamp, if I go on the 1 hour, there's gonna be 4 candles inside that one single. So that means that when you're looking at the high time frame perspective, inside of those candles you have smaller time frame data. In this small time frame data, this can bring you to create an amazing confirmation for your strategy. Let me explain you why. In this case, let's say for example we are bullish on the high time frame. So let's say we are bullish on the 4 hour. This is the 4 hour time frame. If I write 4 hour exactly right here in green. Now we don't know on the 4 hour time frame, by only looking at the 4 hour time frame, when the pullback phases right here will be over. We don't know if, for example, it will end right here, right here, right here. We don't know where this pullback will end. This is the same thing if I go on the 15 minute, and this is now the 15 minute instead of the 4 hour. I still don't know when this pullback will end. So for example, if this is the 15 minutes, I still don't know when this pullback will end or when this pullback will end and price will continue to push to the upside. So what we can do instead is looking for a confirmation on an intermediate time frame. So let me explain what I mean by that. So let's imagine I have a 4 hour structure exactly right here. If I go on the 15 minute, I will see something like this, you know. So I will see smaller structure inside of the 15 minute, the same one that I had on the 4 hour, but now with way more trading ranges. So instead of having in this case, for example, 1, 2, 3 trading range, now I have a lot of them and way more of them, as we can see right here. So we see that we have multiple phases. You have the push phase exactly right here, and you have the pullback phase. You have the push phase and you have the pullback phase. You have the push phase and later on the pullback phase, etc. You can actually measure this pullback phase by looking inside the lower time frame / intermediate time frame confirmation. So what do I mean by that is that if, for example, on the 4 hour price is pushing to the downside exactly right here, I can go on the 15 minute and wait for a 15 minute change of character, in this case right here, that will indicate me that the 4 hour is ready to push up again. If I don't have this change of character and price instead is just breaking structure to the downside right here, I can suppose that we're still continuing to push to the downside and the pullback is not over yet. And this concept is as well really simple to understand because it works on every single time frames. So usually the 4 hour, the intermediate time frame confirmation that you will be seeking would be on the 15 minutes. Same thing, if you go on the 1 hour, the intermediate time frame confirmation that you would be seeking would be the 5 minute or the 15 minute as well. If you go now on the 15 minute, your intermediate time frame confirmation can be on the 1 minute. So 1 minute exactly right here, and same thing, 5 minute, 1 minute, it's as well the 1 minute intermediate time frame confirmation that you can be seeking. And with this concept, you will be able to combine it with some other zones that you think that price might react. So instead of, for example, if you have a point of interest or order block, a supply and demand right here, or even a support and resistance, whatever you're trading, and you know that price is supposedly supposed to react in this area, you don't know it yet before you wait for confirmation. So again, let's imagine that this is the 4 hour. When price will tap into this area, I can go on the 15-minute to wait for my change of character on the 15-minute, like I've shown you previously. And if I have my change of character right here, I can see, okay, this pullback phase is now over. We're continuing to push to the upside into the push phase again. So that means that this change of character right here will create a new bullish range right here on the 15-minute. So that makes me say, okay, that means that we're pushing to the upside again. Of course, sometimes you might have some fake outs. So be aware that if price didn't sweep any liquidity on the left, so if we didn't have any liquidity right here, this might be a trap and you might become the liquidity, as new liquidity will be sitting up in the bottom. But if you swept some liquidity beforehand and then you create a change of character, this is a really strong sign that price is ready to push up again. And if you push to the downside and then sweep liquidity, then as well it's a good idea to see this entry, because then it's as well a good sign that price is ready to push up again. So let's go on a real chart right now for an example. So as you can see right here, I am on Euro GBP. And on Euro GBP, on the 4 hour, overall, we're really bullish. So we're pushing to the upside. So if I go back in time, I can show you the multiple phases so you can see it on a real chart now. If for you it's too hard to identify the highs and lows or your trading ranges, you can always go right here and change the chart to lines, and then that way you can actually easily identify your low, your high, your low, your high, your low, your high, so you can identify your phases. So in this case, when we're bullish, the push phase would be going to the upside. So in this case, this is the push phase, and then you have the pullback phase right here that is actually pulling back to the downside. So same thing, you have the push phase to the upside, the pullback phase right here, and then you have the push phase to the upside right here and right here. So those are your phases. Now I can go back to my candlestick chart and then we identify them right here. Now, like I was explaining, we don't really know when the pullback phase, so this means right here and right here, will be over, or even if a new one will appear, we don't know when it will be over. So this is why you can actually look for the intermediate time frame confirmation as your confirmation. So in this case right here, I have a beautiful 4 hour points of interest. As well, like I mentioned previously, we do have some liquidity sitting down right here just above the POI. So this is even a stronger confirmation that this zone will be swept and this POI might react. But we don't know if it will react or if it's for sure gonna react, because again, if we don't wait for a confirmation, price can just completely destroy it and push to the downside. So the best thing possible to do right here is to wait for the pullback and then go on the 15-minute to scale down on the intermediate time frame and wait for this change of character. So we can as well do this concept on the 15 minutes. So instead of the 4 hour, you can go on the 15-minute time frame, and now the confirmation that you would be seeking would be on the 1 minute. So like I said previously, when you have a 15-minute zone, you can look for a 1 minute as a confirmation. In this case, I have this POI on the 15-minute with a lot of unfilled imbalance right here, with some liquidity being generated close to it. So when price taps into this POI, I'm not straight away entering right here blindly without any further confirmation, because I can get swept. Instead, I can go on the 1 minute and wait for a 1 minute change of character. In this case, it would be this low right here, to wait for your confirmation. And as you can see, right here we broke structure to the downside. So straight after the break of structure, you can wait for this POI to be mitigated and enter right here. Your stop loss will be above this high now, and you can target, in this case, your 15-minute low or just a 1-to-3 risk to reward ratio. The 15-minute low would be here for around the 104. So as you can see, now I have a way refined entry with a way better risk to reward ratio than just entering at this big POI, and I as well waited for the confirmation before price just kicks me out for no valid reasons. So that's it, guys. This is how you can implement the multi-time frame confirmation and analysis into your own trading. So same thing, remember, if you have a 4-hour range and a 4-hour zone, look for a confirmation on the 15-minute, and if you want to trade on the lower time frame, look for confirmation on the 1-minute, and this is how you're gonna catch amazing and sniper entries without any problems.